There we go. Nick Liuzza is with us, one of my favorite people in the whole wide world that is changing the face of the mortgage business with Beeline Holdings.
He is the CEO of Beeline Holdings, Inc., their ticker symbol BLNE. Nick, always great to have you back on the show. How have you been, my friend?
I've been great. Thank you guys for having me.
Hey,
sorry.
No, just real quick. I just want to let you know it's just the boys today because Mary's Mary's out, so it's just us guys. Doesn't mean we actually get to get away with anything, but still,
Nick, because this audience is ever growing and there's always new people tuning in and stuff. This is a good opportunity to kind of do a reset and explain to people exactly what you and Beeline are doing for people.
Yeah, we are changing the face of mortgage. We are a completely digital mortgage platform that has a wide variety of products, and we really are addressing the needs through technology, through our message, through our process. The 140 million millennial and Gen Z that grew up with these phones in their pockets when they're very young, and they shop for mortgages, or they want to shop for mortgages a different way. They want a wider variety of products. Enter Beeline.
I think what's interesting there is and as it started as a millennial sort of focus, it's turned into really even a wider focus than most mortgage companies that exist. It's just that you have a set of tools that they don't have.
Yeah, we do. And addressing the next generation, we have a wider variety of mortgages for that generation. But you're right, we've got a brand new equity product, which no one has, which is not tied to interest rates, which really is addressing the needs for the baby boomers, right? The people that are outliving their retirements and they don't have a lot of liquidity options. This is a true fractional sale of equity product, allowing a homeowner who's equity rich and cash poor to leverage some of that equity without losing control of his house ever, without losing that house, without incurring debt, with no monthly payments, no clock on the equity. And guess what? You never pay it back. It's paid back by the person who buys your house. Whoever buys your house down the road, they end up paying back the equity you spent.
This is exciting stuff because I've seen you over the course of 6 to 8 months really accelerate what you said was going to happen, and then what actually happened accelerated pretty significantly. What are you most excited about? Because Beeline Equity has to be at the top of the list, correct?
Yeah, I really am excited about it because it changes the paradigm of thinking, right? So, in the past, if you were going to do debt consolidation, you would take a loan to pay off previous loans, right? So you may lower your interest rate, but you go to the bank the next day to fill out a private PFS, and your debt situation hasn't changed. Whereas opposed to Beeline Equity, it's true equity, right? So we're changing the way that consumers are thinking and shopping for financial products tied to their home, right? Selling a piece of your home does not mean you have to leave your home. You still get the benefits of your home, but you get the cash now, and there's no interest, there's no payments, there's nothing tied to it. So yes, I'm very excited about that. I'm excited because we are helping a whole new generation of people, the older people, my age at least. We're helping them, and at the same time, we get to grow our revenue very quickly in a market that's not tied to interest rates.
Nick, what's unique about your fractional equity product?
There's a bunch of other products out there. It's a great question, called home equity investment products, and they're like, in my opinion, well, it's not my opinion. They're not pure equity products. They record a deed of trust, which is a mortgage, or a MOU, which is a lien, right? And if you don't pay it back over a certain period of time, they start charging you P&I. Whereas this is pure equity. It's pure equity. You don't go through any underwriting. There's no appraisal. There's no credit check, right? You sell your equity and that's it.
The interesting part about that is, in fact, I was going to ask you this last time. I may have asked you a few interviews ago. Remember the days of reverse mortgages?
Oh God,
I do, and they're still very popular.
And that is for retirees mainly that have a ton of equity in their home. They don't want to sell their home, but it's equity that's going to sit there and just go to their heirs if they don't sell their house and downsize, correct? And they can pull off a little bit of cash with no extra mortgage payment or with no mortgage payment. Is that kind of how that works?
Well, it's how it works, correct? It's a very, very painful process. It's very expensive. And in most cases, or in many cases, the house is lost, right? At the end of the day.
Oh, I see.
Yeah. In this particular case, the house is not lost. So in reverse mortgages, more than 50% of the time, you do a reverse mortgage, and when you pass away,
there's nothing left.
Yeah, exactly.
Or debt. The reason I think about that is you start, and I know fractional equity product is not that, but you start thinking about, though, the fact that how people can take advantage of their equity without it killing the process. Fractional equity is one way to do it. By the way, and I know you have to have an appraised home value of $1 million or greater, and you can sell up to 49%. Do you have to sell 49% if you see a homeowner that's got let's say a homeowner's got $1.5 million property in Orange County or something like that, and they want a few $100,000, so on and so forth. They don't have to go up to 49% of equity.
You could have a $5 million house and sell 5% and get $250,000.
Wow.
Right? You don't have to. You can sell whatever percent you want. It's your decision.
Hey, let's talk about a week ago. You guys put out earnings call highlights, and we talked about that. Boy, you guys really accelerated. How the heck do you now give guidance when you know it's going to be? I mean, knowing what you guys know inside, which we certainly don't, but for you to get 127% year over year, when you really projected like 40% year over year, and with everything you got in the can now, I mean, it's sky's the limit at this point. It's a force. It's a force multiplier.
Yeah, I think when we start getting in, this quarter, right, starting Q2 and beyond, we'll start growing our revenue really fast. Look, we did grow 127% year over year in a really bad market, but you have to remember, we're still coming from small numbers, but those numbers are getting ready to change significantly because we really weren't trying to grow our revenue that fast, even though we did grow it by that number, because the loan economics were negative, and so we weren't spending a lot of money on marketing. Now that loan economics are starting to improve, and now they're slightly positive, we're turning the dial on marketing, and that's going to drive our revenue a lot faster.
Love it.
Nick Liuzza, CEO.
Thank you, buddy. Hey, when are you coming back to San Diego? We got to get you in here. Can't wait.
In this cowboy mouth in the middle of...
So remember the band Cowboy Mouth? We all have seen it over Belly Up? He's coming to town for Cowboy Mouth. That's the guy with the drummer that sings right in the front of the stage. That's going to be a night. We're not doing a show the next day, I can tell you that.
I'll be in town.
Great
guys. Thank you.
CEO, Beeline Holdings, Inc., BLNE is the ticker symbol.